And good afternoon. Welcome into a Thursday, December 10th edition of Market Talk. I am your host, Jesse Allen. Great to have you here with us. Happy holidays. Merry Christmas as we are getting well into the month of December. MarketTalkAg.com. That is where you could find us on the web. Facebook, Twitter, Instagram. It is all at Market Talk Ag, as well as our great radio affiliates on their websites, including WIBW in Topeka, Kansas, KGLO in Mason City, Iowa, as well as KLGR, Redwood Falls, Minnesota, KASM in Albany, Minnesota, and many, many more. Well, USDA report day today, where we didn't see many changes, but we did see some changes on the soybean ending stocks projections. But we saw the quarter bean markets end up trading lower on the day today. A little bit of a perplexing day. Let's talk about it. We'll bring in our good friend, John Heinberg with Total Farm Marketing by Stuart Peterson. John, good to see you. Good to hear from you today. And we were talking a little bit off air before we jumped on. What a kind of a weird day today.
Yeah, again, another one of those lovely report days where you just don't know where the market wants to end up. And in this case, we wound up having to buy the rumor, sell the fact mentality all day today after that report number came out. Good, strong start in the grain markets, took out some overhead resistance, felt really good about where maybe this market was headed. Really got numbers today that really were pretty much in line with expectations, maybe a little bit on the lighter side or heavier side than we thought. But then the market just basically saw the money flow out. If that's a combination of the time of the year, the lack of liquidity in the market all coming into play here. We ended up on a fairly disappointing close on at least the corn and the bean markets here today. So now I'm kind of perplexed where we're going to end up the week and what next week gives us. But, we're going to get back to the weather story and the demand story and look at those things going forward.
Well, let's first focus on this soybean market because I think that was the most interesting one of the day. USDA comes in, carryouts now at 175, down 15 million on the month because of higher crush demand. And if realized, tightest supply in 7 marketing years. We saw some export news come across the wire this morning for soybeans. But then, this market, as you mentioned, it was up 14, 15 cents overnight trade through mid-morning, and then the report hit. We digested the report, and we end up finishing down almost a nickel today. What happened in this soybean market? I mean, it just seemed like an odd day to me.
Yeah, again, like we said before, it really kind of was. We had a lot of optimism. We got export sales numbers this morning. And we saw sales 600,000 plus, which was in the middle of expectations, but at least we were up from last week. One thing that was even nice to see in those export sales out in 2021-22, you saw China sneak underneath for a few bushels for next crop year already. So that's encouraging to see. And I think that kind of motivated the market this morning. We're really looking at right now that USDA target of 2.2 billion is our export goal, and we're about 87% sold, pushing 90% sold on that number. So the market was really anticipating seeing a bit of a cut, or a bit of an addition to those export targets. And I think when we didn't get that today, that was disappointing to the market overall. Even though we did see that drop in terms of the carryout because of the crush side of the equation, I think this market for both corn and beans was looking towards seeing a few more bushels get put on the export demand. That probably is going to happen in the January report, and that one's going to start really weighing pretty heavily in the market and the traders' minds here as we go forward, because that one we're going to look at that ending production, and then we'll really start making some adjustments on where this crop is. But we had low range close today, well off our highs. Fell under some moving average support, so technically the charts are probably set up to see some more negative push. But maybe tonight traders will sit back, look at the numbers, and say, hey, we're down to 175 million bushels. Realistically, the United States needs about 140 million bushels in the pipeline just to maintain itself. So we're getting pretty doggone tight.
Yeah, we are getting very, very tight. And you mentioned some of that resistance. I mean, we broke below that 20-day average at 1168, and that next kind of area of support is that recent low around 1140, 1141. Be curious to see if we break towards that, or like you said, going into tomorrow, we might see a reversal of some kind. I think a lot of producers, we've talked about this before. Soybean producers are mostly, they've sold a lot of that crop, so they're not necessarily trading this market heavily. But then again, there's still some folks out there who have soybeans, so it'll be interesting to see where this market goes tomorrow. On the corn side of the equation, we were down just a couple of cents today. We really We lost about a nickel or so, I think, off our highs. But again, this corn number, no real big changes in the December reports. Corn, what are your thoughts there after today's report?
Yeah, the USDA basically did a push today, in
Yeah.
terms of not tweaking anything in the balance sheet. Again, I think the market was hoping to see a little bit get added to the export side of the equation, and it didn't. I mean, realistically, the market was expecting about a 5 million bushel cut. So, the weakness in the market today obviously probably came more from the fall in beans than it did anything else in that regard. Still going forward, I like this market, and we're seeing the demand side pick up. We had a sale of corn to Mexico here yesterday, another 350,000 tons this morning. So there's some value here in this market. You talk to the producers in the countryside in most regions, the basis level is staying extremely friendly going forward. That tells us that the end users are looking for product. Realistically, again, we got to get through the end of the year. If we do see some pullback, to me, that's a buying opportunity in a market that's got still pretty good upside and strong demand in it. But we seem to be supported very nicely the last week and this week. We dropped down to that 415 area in March, and the sellers just kind of disappeared. And the market rallied out of there. So, so I'm encouraged to see where we are. And again, didn't like the close today, but realistically, it's another set of higher highs, higher lows. So we're still kind of trending the right way here, even though it'd been nice to be up one or two today versus down one or two at the end.
Yeah, very, very true. And you mentioned this at the beginning. We're gonna kind of shift back to a weather market here, especially looking at the South American crop. I know globally, USDA they cut soybean and corn ending stocks slightly, lowered production outlooks for Argentina. They left Brazil unchanged. I mean, for the most part, I'm with you. I see a lot of support still in this corn market, and obviously tomorrow will maybe tell a little bit better of a story after we really digest all of these numbers.
Yeah, and that's something that's really going to be the focus now. And they're getting some moisture in Brazil. It's still early for the USDA to make a lot of cuts. It'd be the equivalent to them walking into the July report and making some chops in that regard, for us here. So their weather is probably about the 4th of July, 10th of July window, if you flipped it over in comparison. So we'll have to see how that kind of plays out. We're hearing some minor things that are starting to get shaved back in some areas. Those cuts will start coming after the first of the year if there truly is some crop issues that are developing there. Regardless, though, in Brazil, they're still going to produce a nice crop of beans. Maybe it's going to be more of a corn story. That's still the biggest thing we need to watch. Argentina might be the bigger watch right now of the two South American countries. We did see those million tons come off of both corn and beans today. They are staying on the drier side in Argentina. And again, that could come into play. We still got the cheapest corn in the world. We got a dollar index that's staying soft. That's going to keep that demand side of the market very, very heavy. It wouldn't shock me over the next few months that we see another couple 100 million bushels go on to the U.S. demand in terms of the export number. That would seriously put some pressure on carryover. And again, I'm pretty optimistic the corn price, but we kind of got to get through maybe the end of the year and see how the money flow handles it.
Sure, very, very true. Now, wheat was the flip side today. We saw wheat futures finish strong, held on to most of those gains we saw throughout the day. Wheat ending stocks were down modestly on decreased imports and increased exports for the U.S. World carryover for wheat, that was reduced on increased demand expectations as well. So taking a look at this wheat market here today after the report, seems like we see a little bit of strength here. What are your thoughts?
Yeah, that report was actually kind of friendly for the wheat side of the equation. And, that's going to be one of the flips of a stronger corn price is improved demand in the wheat market. So the market reflected that a little bit today in terms of, you talked about that world ending stocks, and that's really what it's all about when it comes to wheat. Markets thought we would be about 321 million metric tons. We came in at 316, so a bit of a miss to the downside there. Maybe looking at some of the issues in Ukraine in terms of their winter wheat crop, as well as, what's happening in the southern plains here, Argentina, those type of situations. So anyway, good turn in that chart today. We got that turn started yesterday and got some follow through today. So now what do? Do we get this thing to push back through the $6 window? Good possibility. We can see that strength kind of occur here as we've been probably seeing a little bit more buy corn, buy bean, sell wheat type spreads unwinding today, given that buy power into the wheat market. So with that, the demand has improved. Still a lot of talk that China's sniffing, looking for more wheat at the same time. So maybe we got a little bit of a market correction coming here, but the overall trend is still lower. But if we get up into that 610 zone again in that March contract, it's probably a window you want to make sure you're still staying a little bit defensive, given the fact that it's still overall heavy.
Yeah. Well, and I know Russia saw a little news out of there today as well. May need to limit exports to protect domestic bread prices there. So it'll be interesting to see how this wheat market goes moving forward. And again, I think tomorrow will definitely be a telltale sign of where these markets are going to head to round out the week and into next week. John, any other final thoughts on the WASDE report today before we shift to livestock?
Like I said, today was the speed bump report in my mind. In other words, just puts a little bit of information out there to get the market to chew on. Really nothing either way that comes to play. Biggest thing that still jumps in my mind is the fact that that carryover for beans did get smaller. And are we truly rationing beans at 1150 to 1170 price range? Probably not. And it wouldn't surprise me to see this market move higher. Again, we talk about basis levels. There's some pretty friendly numbers starting to develop all the way into the summer, into next year. Again, that's just a sign these end users are concerned that those beans aren't going to be there when they need them. And as USDA showed us today, the crush is strong, and they're going to need those beans for soybean meal production to feed our animals here in the United States when we get to those summer months. So if you're moving beans, you got to be disciplined there. Make sure you keep some floor or some upside potential in that market all the way out into next year.
John, let's switch over to livestock trade. Talk about that here after today. Cattle still seeing some strength, remaining strong. Feedlot country has been pretty dead quiet today. Just a few scattered bids out there. We picked up a few more this afternoon, but really not a lot of business out there in the feed yards and the feedlots. But taking a look at this market, we at least held that strength today. We were up modestly in live cattle, feeder cattle as well. Looking at this cattle market after the report heading to Friday, anything new there that you're seeing that we might want to watch out for?
Well, we're looking at some seasonality kicking in here. We've had some pretty negative news the last couple of days in the cattle market overall. And here's a market that's finding some footing, climbing a little bit higher. Solid closes today off of yesterday's kind of turn. So technically, I'm a little bit impressed with the way the market's handled the last couple of days. You go look at seasonal windows or seasonal history. We typically sell off into the first notice day of the December contract. That was on Monday. And then we had, choppy day Tuesday, modest gains again today. So maybe that's what's coming into the play here is just a little bit of optimism where the market's going to be a few months from now. December is going to stay very limited. It's going to be tied to the cash market, and we're seeing 107, 108 cash trade out there, which is obviously disappointing. So that's keeping that December in check. But really the focus for me right now is what's happening with February, April, and the June contracts. First off, you got a spread between February and June that's historically very, very narrow right now. Typically, that widens out in this window. So we're kind of watching that, and that maybe will bring some bids in, as we see maybe some money flow and we bull spread that market. So I'm a little encouraged just on the technical side, but I'll tell you, I'm very, very cautious when you see retail values lose over $20 off the high in a matter of a week and a half. So that's discouraging. You got cash trade scratching, hopefully a shorter term low here around 107, 108. We need a little stability there. With a thinner market, it makes me a little cautious of cattle right now, just because this little bounce might be a bounce to sell, given the fact the fundamentals are as shaky as they are. But I'm looking at that calendar and optimistic. You're talking about food prices. We're talking about inflation. I know that's something that's on the radar. I was going to mention that when you talked about the Russian, bread prices. The article I was reading, President Putin was like, why are prices going up? Well, it's the fact that we've got so many global monetary systems pumping money like crazy into these markets to help support or into the system, and inflation is going to be the direct result. As we're even talking about another $1 trillion package or possibly in that area again here in the United States. That's going to come out somewhere, and that's going to wind up coming out in the inflation side of the equation. So that keeps me optimistic of those cattle markets here in the longer term.
Now, flip that over to the hog side of things. Hog market kind of just waned lower today. Traders seem to be investing, more in cattle contracts. And I mean, you could take a look at the higher midday cutout value, maybe try and get excited, but there's just no support in this hog market right now. It just kind of a really, I would say, a wishy-washy market maybe. Is that a good way to explain it, John?
Wishy-washy on a slippery slope is the way I look at that hog market right now. And that all comes down to one thing, and that's the amount of hogs we're processing in here.
Mhm.
You know, we're pushing almost 500,000 head one couple days this week. That's a lot of pork product going through the system. Now, we are moving it, and that's encouraging. But again, it's just a market right now that just seems overflowed. We're pushing capacity. In terms of slaughter capacity in these windows, that's weighing on that cash price, and that's weighing on these front month contracts. I mean, last week alone, pork production was 613 million pounds. That is the largest week of pork production in history, eclipsing last year's number on the same week. So we're just in a spot. We got a lot of pork coming at us. We got concerns regarding the demand side of the equation. Export sales numbers were okay today, but we're watching those 2021. China was absent on the 2021 sales totals today, or if they were in there, it was very minor. So that weighed on that February price a little bit here. So it feels like right now we got a technical picture that's not very good, and it feels like it wants to break. You know, we broke down lower on the Feb contract and put a little gap on the chart. We haven't been able to get back above it. Now we're consolidating. Today we closed under the 100-day moving average. Don't be shocked that we see a breakdown just on the technical side in that market overall. So a lot of pigs out there. We got a quarterly hogs and pigs report on the 23rd, so that might help clean up the picture a little bit for us for the 2021 window. But at least in the short term, feels like the hog market's on a bit of a slippery slope.
Sure. Well, and I think overall with any livestock markets, again, story comes back as well to COVID and demand issues there, and we'll see how that affects everything as we move through the holidays here and into 21. John, we covered a lot today. It's been a busy day. I know you've been busy, and I've been busy watching things as well. Any other final thoughts before we wrap it up?
You know, producers, when it comes to these grain markets, stay disciplined to your targets, you know, but then make sure you find a way to shift the risk. That's always still going to be a big key. You know, I had some producers sell some new crop beans today on their own choices because they got a number that was a great starting point, immediately called me up, picked up some call strategies to own those beans all the way till next year. You understand you got to make sure you get those bills covered first and sell to cover the window, and then you got extra room to work with things. Same things happen in the rest of these markets. Look at the value, see what's there. We do have a lot of wild cards floating around out there that could quickly turn into a black swan event if it needed to again. So we need to make sure we're always cautious of how to protect value.
John, if producers want to reach out to you and the team at Total Farm Marketing to get a little advice about their marketing plan, what's the best way to do that?
Sure, love to talk to them again anytime. Give me a call, 800-334-9779 is the number here at the office. Feel free to shoot me an email at johnh@totalfarmmarketing.com.
John, always a pleasure, my friend, and thanks for the insights on the report today and more, and have a good weekend. We'll talk to you next week.
Thanks, Jesse. Take care, everybody. Have a good week.
John Heinberg with Total Farm Marketing by Stuart Peterson, our guest today here on Market Talk. Find us online, markettalkag.com, Facebook, Twitter, Instagram. It is all at Market Talk Ag. This has been the Thursday, December 10th, 2020 edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.